Hello, welcome to this conversation on markets and economy. I am Vijayakumar, Chief Investment Strategist, Geojit Financial Services. With me is my colleague Sony Mathews, who is our portfolio strategist. Sony, for the last few weeks perhaps, the market has been experiencing a robust bull run. On November 4th, the Sensex touched an all-time high of 40,301. You have been in very close contact with the retail investors for quite some time now. And what is the response of the retail investors to this bull run? How do the retail investors feel?
Yes, sir. The benchmark indices have been on a good roll over the last few days. The indices have recovered from their lows. But then when you look at the broader markets, you take the Nifty Mid-Cap 100, the last 1 year returns is minus 3% in spite of the latest, uptrend that we are seeing in the markets. 2-year returns have been minus 15%. The Small Cap 100 index, again, 2-year returns have been minus 30%. You look at the SIP returns of some of the small cap mutual funds. SIPs are supposed to be a relatively safer way to invest, but even those funds have also been giving close to minus 5 to minus 7% returns in this market. So what we are seeing is basically the most of the new investors would have entered the market during the bull run of 2017. Those investors,
bull run in mid and small caps.
Mid and small caps especially, we saw like 30, 40, even 50% returns. So these investors are still sitting on negative returns or negligible returns, you can say. Now, the question in everybody's mind is what is happening with the mid and small cap. I think we've seen the large cap stocks run up, the mid and small caps not so much. So I would like your views on that also, on what we can expect from the mid and small cap segment.
Yes, you hit the nail on its head, Sony. Retail investors have not participated in this bull run because most of them are invested in mid and small caps. That's why I've been observing the total lack of celebration in the market.
Exactly.
Normally when the Sensex touches a record high, there is celebration. But this time there is silence on the streets. The reason is very simple. Mid and small caps are underperforming and investors are still sitting on a loss. So the answer to your question, what is the likely trends in mid and small caps going forward?
So there is still a lot of doubts, in investors' mind on whether it will recover or not.
Yes, that is there. Those doubts are there. Now we have to look at the valuation of the market. If you look at the valuation of the market, 3 dimensions emerge. One is the market in general, now we can say, is fairly valued. But one segment of the market, the large caps, particularly the quality large caps, not all large caps, the quality large caps are richly valued. And some sectors are even saying that the valuations of some of the large caps are in bubble territory. For example, there are some large caps which are quoting at 65, 70, 75, even 80 PE.
And the historical PE would be how much for these?
Will be much lower than 50, even for these blue chips. Of course, they are consistent compounders, but then 70, 75 PE multiple would be very excessive valuations. So that is one. And the present record Sensex that we talked about is mainly driven by these large caps, few large caps. At the same time, the mid caps, the third dimension is the other segment of the market, some large caps and also predominantly mid and small caps are undervalued. The valuation is much below the historical valuations. You refer to the high valuations of the mid and small caps in 2017 because a lot of money came into the markets after the demonetization and the valuations reached unjustifiable levels. And we are paying the price, rather we paid the price last year and also this year for the excesses of 2017. But now the scenario has changed. We have very high valuations for some large caps and we have very low valuations for mid caps. So mid caps which were valued at a premium to large caps in 2017 are now valued at a discount to large caps. Therefore, it is quite probable, it's very difficult to predict the market, we know from experience, but then it is quite probable that going forward in the next few months, the tide might turn and there will be an opportunity for a tactical trade in mid caps. At least for a tactical trade, some mid caps, some institutional money will start flowing into mid caps. I'm not even very sure about the small caps even now, because in a slowing economy, the small caps will find the going very tough, right? But then mid caps, and there is value in mid caps, therefore it is quite possible that mid caps can outperform large caps going forward. In Geojit, we have been making recommendations on some of the funds. Which are the funds that we are recommending?
Just coming back to the stock picking, we talked about the mid and small cap stocks which we can look at, but then does an investor focus only on the valuations when you are picking up, because it's inherently risky picking out mid and small cap. We've seen a lot of good fundamentally strong stocks coming down, so pure valuations, will that be enough for an investor to pick a good mid cap stock?
No, certainly pure valuations cannot be always a reliable indicator, certainly not. Some of the stocks, mid cap stocks which are highly valued now may be attractive buy because they may be just turning around. Therefore, individual stock picking will always be risky. An individual stock picker should go for small and mid caps only if he or she is very sure about the prospects of that. The safest route will always be going by the mutual fund route, and we have been suggesting certain mutual funds, recommending. Which are the funds that we are recommending?
So basically, Geojit MF recommendations, we've been having it in various categories. So we've been talking about mid cap category. If that is a tactical trade, this thing, it would be much better to look at a mutual fund investment. So our 5-star rated funds, for example, we have the Axis Mid Cap Fund.
Axis has been a consistent
performer. Yes. Kotak Emerging Equity is another fund which has our 5-star rating, and so we have these L&T Mid Cap Fund. So all these funds have been having that 5-star rating which we've given from our side. Now, if you want to broad base your investments, again we have the multi cap category also, in which I guess SBI Magnum Multi Cap Fund, which has our 5-star rating, is a good option for investors to look into. Now, after the recent recategorization by SEBI of MF schemes, we have a new category that was inserted, basically large and mid cap. So as you said, maybe some of the large caps might be in overvalued territory, but if an investor wants to look at both large and mid cap, they can maybe look at the 5-star rated funds over there, which is basically Mirai Asset Emerging Blue Chip is a good option. Sundaram Large and Mid Cap is also a good option. So based on the risk appetite, an investor can look at these funds. So our 5-star rated funds are what we described earlier. So you can look at
that's a very good point, particularly your recommendation regarding multi-cap and large and mid-cap funds, because in these two categories the fund managers have the flexibility, which they won't be having in specific large cap funds and mid cap
and
funds.
I think it will be a much more disciplined approach by the fund manager rather than an individual picking
and
stocks.
Particularly in the current context where there is excessive valuation in some segments and attractive valuation in some other segments, multi-cap funds would be some funds which can be looked into. Sony, another point that is being discussed very widely these days is the paradox of slowing economy and rising markets. The economy is slowing, there are no good news on the economic front, but the markets are rising, so a large number of people are confused about that. What are your views regarding that?
So that is something that we face every day, in the sense the earnings are still not recovering, the corporate earnings have still not recovered that well, the markets are rising, the economy is slowing. So what we are seeing is basically the mid and small caps finding difficulty to raise funds. So there is a credit squeeze in the economy because of the liquidity crisis in the NBFC segment. Plus, my feeling is that the rate cuts that have been done by the RBI have still not completely been transmitted into the economy. I think there is a delay. The problem could be because the deposit rates are already at a low, this thing at subsidized level. So these two things are the main things I feel which is hampering the economy. So I think you would be a much better person to talk about the slowing economy. What are your views on that?
Yes, I would like to add some important points. Now this paradox of slowing economy and rising markets is actually a global phenomenon. Now we have to appreciate the fact that globally markets are highly correlated. All the markets are moving in tandem, and this falling or slowing economy and rising market is there everywhere. Take US for instance. US economy is slowing down, but S&P 500 for the year till date, till November 4th, is up by 22%. Yes.
So it's more news driven, you feel? Or
not news driven. I will explain that. Take Europe for instance. For Europe, for the Eurozone, the best indicator is Stocks 50. And Stocks 50 is up by 22.7%. And Europe has slowed down. Eurozone has slowed down substantially. Germany is on the brink of a recession. But German DAX is up 24%. In UK, they have all the problems related with Brexit. Political problems, the economy is facing challenges from many fronts, but the FTSE is up by more than 9%. Everywhere, in US, in Europe, in emerging markets, everywhere, economies are slowing down, but markets are rising. The reason is very simple. We have lot of liquidity in the global financial system. To really appreciate that, you have to go back to 2008 when the Fed, the European Central Bank, almost all the central banks, but particularly the Fed and the ECB went on ultra loose monetary policy, printed currency and bought bonds. So there's humongous liquidity in the global financial system. And a very important point to understand, to understand and appreciate this paradox of slowing economy and rising markets is $17 trillion worth of investment in bonds are now yielding negative return. 17 trillion, it's not a small amount of money. For the first time in global financial history, that $17 trillion are yielding negative returns. So in this context of abysmally low returns on fixed income, money has gone into equity, and that is why even when the economy is slowing down, the markets are rising. And in India, we of course we are what shall I say, the tailwinds of reforms, because this is more a hope rally. The government has woken up and is implementing reforms. So this is the reason why we are having this paradoxical situation. It is a global phenomenon. Therefore, we need not be concerned about this paradox in India. And this is not a sustainable paradigm for long. Either something will change, but for the present, this paradoxical situation will continue. Therefore, as far as investors are concerned, investors should look at the market, as I referred to earlier, from the valuation perspective. Large caps, particularly quality large caps, highly valued, richly valued. Some segments, even in large caps, fairly valued. Markets generally fairly valued, but segments of large caps and substantial segments of mid caps undervalued. So there can be a tactical trade over there. Of course, even though quality large caps are overvalued, or rather richly valued,
they are still good stocks.
Yes, they are good stocks. But then we are not suggesting that the investors should get out of that. Certainly not, because it remains sensible to remain invested in these quality large caps, even if the valuations are very high. What we are trying to say is, don't aggressively buy them now. Blue chips, they may be blue chips, they may be consistent compounders, but at a PE of 60, 65, 75, even 80, the margin of safety is not there. So don't buy aggressive.
Start peeking into mid caps now.
This is
good time.
At the same time, we should make the funds that you suggested in mid caps and multi caps, they may be an attractive buy right now. That is what investors should be focusing on right now. Thank you very much.